The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the March 3rd, the terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know I am absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send it off early. Send that to Steve at TFNN.com. Inside the subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we got a market that is cruising to the downside. Everything we're looking at is red. You got the Dow down 994, 125 for the S&P, 475 for the NASDAQ 100, 77 for the Russell, 508 for the transports, 342 for the semis. Gold is down 186. Silver's off $5 and change. Light sweet crude, though, is up $6. Silver, I'm sorry, not silver, but natural gas is up 16 pennies. All the sectors inside the S&P 500 are trading to the downside. Of course, cruising the upside, you got King and Dollar. And if we take a look at the U.S. dollar index, it's already attained the 1 to 1.272 A to B equals CD pattern. You may remember, those of you that are longtime listeners out there, we did the study of the U.S. dollar index on a yearly basis. We went back and we saw that every year that the dollar moved lower since 2007, the next year was a move higher. Well, it looks like we've got that pretty much cemented in at this stage here. And now the next price target area for the U.S. dollar index, you can see the A to B equals CD pattern on the daily time frame chart. That's your left-hand panel. We're likely to go target the 1.618 expansion that gets up to the $100.43 level. Of course, all this is courtesy of the yen, the pound, and the and the euro out there. So let's put those currencies up on our screen. We'll see the euro on the left-hand side. You can see the A to B equals CD pattern, A, B, CD pattern to the downside, with price potentially finding support at its breakout level. That's at 115.76. If price closes below that, we're likely to see further lows. That would be strength inside the U.S. dollar index. If we take a look at the Japanese yen, if it closed the day above yesterday's high it's 157.75. We're at 157.90. It'll negate its TD9 count top and will suggest that we are headed much higher. There's an A to B equals CD pattern. That says the yen gets weaker, the dollar gets stronger. The Great British Pound is in an A to B equals CD pattern to the downside. Look, these three currency pairs represent like 75, 80% of the U.S. dollar index. That's why I don't have the other ones out there to take a look at. This is all we really need. If you're trying to understand what the U.S. dollar index is doing, it's based upon what its counterparts, the other currencies that make that up. And these are the three primary ones. The Great British Pound, you can see the A to B equals CD pattern to the downside. Only a bullish reversal candle would stop that from moving lower out there. So the setup here, really, with the euro being a 57% weighting inside of the U.S. dollar index, watch that 115.76 level. We move below that, we're headed lower out there. So that's what's going on in the currency. If we take a look at Bitcoin, the March contract, that is the active contract, just consolidating with inside its profile between 63,505 at support and 71,890 is the center of the profile where buyers and sellers believe there's fair value. We just haven't been up there for a while. So that's what's going on inside those markets. I'm going to go ahead and close down these screens. We're going to go over to the chart that is perhaps the most interesting chart out there. As I've shared with you in the past, the Spot VIX Index has some amazing tools, least of which are the ones that determine whether what do the people say about the Spot VIX Index? Yeah, forget it. Let's go to what. So a number of excellent tools, right? Well, first we've got the 1-day rate of change above and below plus 10%. That's this chart that's out here right now. If we take a look at the Spot VIX Index, it's up by 20.1%. Don't know what it will be at 4 o'clock, but if we do get a move above plus 10%, odds favor that we have a rally. That's one use of it. There's another use which is below minus 10%. That's an initiation to higher price out there. So beautiful signals there. What else? We've got that 50-day exponential moving average. If we take a look at the Spot VIX, when it's trading above the 50-day exponential moving average, and the 50-day right now is at 1848. The Spot VIX is at 2579. When we trade above the 50-day exponential moving average, it provides sellers with an edge. When the New York Stock Exchange Advanced Client Oscillator is below its zero threshold level, that also provides sellers with an edge. You can see we're cruising down. We're headed towards the minus 150 level. That, by the way, would be oversold conditions. Now, I haven't shared with you, I just shared with you a few of the tools of the Spot VIX Index, but I haven't shared with you perhaps the most important one. And that's the one we'll take a look at next. Now, this is dependent upon today's close. And what this chart is doing, you're really looking at the bottom panel of the chart. The bottom panel of the chart shows you the spread between the Spot VIX Index and right now its 1-year counterpart. If, in fact, we close above 1, and we're right now at 1. If we close above 1, and then we close back below that, boy, that would be a gigantic, a ginormous buy signal. If we take a look at here is the 6-month counterpart. That's a 3-month counterpart. Let me just open up the 3-month counterpart here. And so let me just get this chart here going. So you can see that the last time that we had this Spot VIX Index, it's such a beautiful tool out here. Takes us back to November 20th, 2025 out there. And the way you use this tool is you got to really wait for price to drop back below that 1 level. What this is telling us, here, let me just show you what it's telling us. All you have to do is take a look at the Spot VIX Index, trading right now at 25.75, and look at all the forward future contracts. Now, I'm only going out to September here. We can go ahead. We can add September in. Just give me a moment. We'll, let's say, YouTube. There we go. So we got September's that's out here. We're still well below that. So this contango is it really matters at day's end. So right now we got the intraday signals out here with the 3, the 6 month out there, and obviously with the Spot VIX well above the forward future contract. This is telling us that what the market is, the market's determination right now at 11:13. I can tell you what it is. It can shift at 11:15, but 11:13. This is saying this is a short-term event. Again, back to this set of charts out here where we take a look at the spread between the Spot VIX and its 3-month counterpart, its 6-month counterpart. When that gets into contango and we get above those closes above the +1 level, you're watching for it to move back below. That typically identifies either significant bottom or certainly a tradable bottom. So something to keep our eye on, but more importantly, to keep our eye on at the close, not what these things are doing right now, because there's a lot of time left in the trading session out there. And we come back from this break, let's start taking a look at the trading session. Let's look at the ES and the NQ. Let's take a look at intraday, what's going on. And then we'll come back and start taking a look at some of the requests that have come in. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. You know what I put up on my screen out here is the daily and weekly equity future charts. We'll go take a look at what's going on intraday out there and try to identify if there's any bottom signals out there, which I believe there are. So if we take a look at that, I think what's perhaps most important here is the NASDAQ, is the NQ out here. And so I want you to know that what price has done, yes, we're trading below the bottom of its daily profile, 24,856, but we're also trading into its weekly profile. Now, this profile is really quite interesting. The daily profile, as you may recall, wrapped around the prior profile. That gave us a message from a profile standpoint to expect and anticipate a consolidating market. The weekly profile has formed above the prior profile. From a profile standpoint, that is a bullish signal. That's what's coming from the weekly time frame chart for the NQ profile-wise. Daily consolidation, weekly ready to move higher out there. I know it might be hard to believe, but I'm just sharing with you. I'm just interpreting the charts, just narrating the charts, quite frankly. The interpretation is pretty easy. Now, there's additional support for the NQ on a weekly basis, and that's at the 24,245.50 level. I'd say that's the last bastion of hope. If price were to close below that, then we're definitely headed lower out there. The other U.S. equity future contracts, you've got the Russell, which is trading with inside its profile, trading below profile support. On a daily basis, its next level of support would be its breakout level, 25.17. Turns out at 25.19, you've got the bottom of the weekly profile. The ES Mini and the Dow Equity Future Contract now on a weekly basis, obviously only Tuesday, but in the Dow's case, we are trading below 48,312. If we close below that, that opens up the door for a move to 46,579. It's TD9 count breakout level on a weekly basis. The daily TD9 count breakout level is at 46,570. Oh, both. That's beautiful. So you got both at the same price point out there. That would be a strong support level should price get down to that area. And then on the ES Mini is trading below profile support. As one of our dentists has pointed out, there's the possibility maybe of a 3 drive to a bottom pattern out there. That would require, in my case, that would require a bullish reversal candle to confirm that possible pattern. But short of that, 66.8450 is a price target. It's breakout level on a daily time frame. The weekly all the way down to 63.90. So grab a snapshot of this screen out there, especially for trading the NQ. Please be paying attention to that 24,245.50 and 24,450 level out there. We are into support. In fact, let's go see what's going on from an intraday base. I'm going to close this out because it's a resource hog. I still having some technical glitches, working through it with Ninja Trader, thank goodness. But we still got just a couple of elements to get through out there. So, but a big progress since late yesterday. What a heck of a day. So let's get to the intraday charts out here. Let's pull those up on our screen. So we got the NQ perfect. That works out just great. We're just simply trying to identify any topping signals, resistance levels, bottoming patterns, and so forth. These charts here ought to populate pretty quick. So you've still got unbelievable. So the NQ's 5-hour time frame chart, TD9 count bottom pattern is still intact out here. Thought it was going to fail. Let's open this chart up. So here's a real key level. There's a couple different key levels out here, but the one that we're looking at right now is the one that just formed yesterday, 2 days ago at 4 o'clock, yesterday at 4 o'clock in the morning, March the 2nd. And that low out there is 24,477. We have not closed below that. That TD9 count bottom pattern is still in effect out there. Okay, so that's something to keep in mind. It hasn't been able to bust through that level. And now we're testing a TD9 count bottom as well from back at 11 o'clock in the evening on February the 5th out there. And they close above 24,579.50 would be a test and rejection of that swing points high. So just something to consider. Now, on a 5-hour time frame, price is dealing with the bottom of its profile. That's a resistance level. And if price can get back above and close above 24,601.35 and do it by 2 p.m., I would suggest to me we're headed to 24,752, 24,850. Again, the bottom on that thing should have been able to have been busted through. It wasn't. That's a message. If we take a look at the 2-hour time frame chart, you've got a Rhodes momentum indicator bottom, and if price can close above its red oscillator and change line at 24,625, 24,754 is in the cards. The 60-minute time frame chart attempting to form a Rhodes momentum indicator bottom with price taking on profile resistance at 24,567. Close above that, we head higher. We've got a Rhodes momentum indicator bottom on the 30-minute time frame chart. Price, if it can close above 24,610, that's the top of its profile. 24,767 is in line. On the 15-minute chart, 24,662 becomes the number out there. The most important number, I would say, what would you say, Stevie? I would say the most important number is going to be the 5-hour oscillator unchanged line. And that's right now at about 24,754 out there. If we can close above that, that would be a bullish outcome. You close below this morning's lows out here. Let me give you that. On the NQ, that low would be 24,352. We're headed south. But at this stage here, we've kind of got the, late lunch, early brunch. We'll call it the brunch rally. That seems to be going on now. That's what's going on inside the NQ. Let's go test out the ES. Well, let's go take a look at the daily equity future count. Just kind of curious here. Remember, we talked about the consolidation patterns out there. We'll get to the ES here momentarily. But if we take a look at, so again, the ES mini testing and rejecting the bottom of its consolidation. But as Dudette pointed out inside the Tigers Den, we have made a lower low, with the potential of a 3 drive. It's not an exact 3 drive. I like the distance between each of those lows to be the exact same number of bars. But in this case, it's not. But we'll go ahead and give it a break. At that stage, the NQ still hasn't made its way back to the bottom of its consolidation pattern out there. Interesting. Okay, so let's go take a look at those intraday charts for the ES Mini. So we get back over here. It's going to have to populate with the NQ. My apology for that, but then we'll put up the ES Mini. That's going to take about 15 seconds to populate as well. Oh, well, come on. What are you doing here? All right, ES. Give me some space. 03. Okay, 26. Sorry about that, folks. All right, so we'll have the ES Mini charts up on our screen. We've already been through the NQ. We've looked at all those intraday charts that are identifying bottom signals out here. I think on the ES Mini, we're going to see some TD9 count patterns that maybe have already failed on the shorter-term time frame charts, but let's go find out. As soon as these things populate here, we can see on the 2-hour time frame chart, price is right up against the oscillator and change line. If it can get above, I'm sorry, that was the NQ. What? That was the NQ I was looking at. Sorry. Okay. Let's just wait for him to populate, and then we'll be better off. Okay, so on the 5-hour ES Mini, it did no son of a gun. No, did it? Okay. The low of that TD9 count pattern is 67.6850. This close was 67. 68.75. I'll be a son of a gun. So the 5-hour chart for the ES Minis TD9 count pattern has also held up. 4-hour time frame chart looks like we'll get a Rhodes Momentum Indicator bottom at 12 noon. Is this at 2 p.m.? Sorry. Don't know whether we will or we won't. We do have it right now. You've got a Rhodes Momentum Indicator bottom pattern that's forming on the 2-hour time frame chart. Really needs a close above 67. We'll call it 98. The oscillator and change line. Rhodes Momentum Indicator bottom on the 60-minute chart. Watch 67.98 there. That's basically the top of its profile. The same thing on the 30-minute chart that has a Rhodes Momentum Indicator bottom. 67.95.50 is the 15-minute time frame chart. TD9 count breakdown resistance level. So these are the short-term time frame charts are what you want to watch. But really quite interesting, Stevie's mind, that the 5-hour time frame charts have still held their TD9 count bottom patterns. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. I just put up the Dow Equity Future Contract charts on my screen in case anybody wants to grab these. They're really showing the same kind of setups that we're looking at, which is right now just simply a counter trend move that is going on. And it looks like it wants to extend itself. I would say the levels to be watching out here, 48,151. If we move above that, you're looking at 48,351. Ideally, the key resistance out here, not ideally, but key resistance right now, I'd have to say, is in about the 470-ish type level out there. So just grab a snapshot of these charts so that you've got that as well. Let's move on to some of the requests that have come in. The first one coming in from GTE. I'd like to take a look at XPEV. XPEV getting crushed this morning on the daily time frame. You can see gapping down out there. But the daily, we'd already taken a look at this GTE. It is a confirmed AB equals CD pattern to the downside. It's going to see lower price. Its price target is down around the 1161 level. That's the weekly TD9 count breakout area. The monthly time frame chart shows you the consolidation. If we get below 1161, we're looking at 806. So that's what's going on with regard to XPEV. You also have an interest in the China Web entity, KWEB. So let's pull that up on our screen, see what that is signaling to you and I. Again, this will take just a few minutes here, a few moments, seconds, but more than just a few seconds to actually go ahead and populate, unfortunately. But we got K-Web that is trading out at, I hesitate to say, $29.49. So on a daily time frame, I see nothing that indicates any kind of a bottom. On a weekly time frame, I see an A to B equals C to pattern to the downside, so it's present on the daily. The swing point here was back on January 2nd, and the volume on that swing point was 64 million shares. It was passed with 121 million shares. So K-Web, which has a weekly Rhodes Momentum Indicator top, wave number 7 top, now has a confirmed weekly A to B equals C to pattern to the downside. We're going to give you those price projections here momentarily. And that initial price projection gets us down into the range of about $28.35 out there. 27.83 is more likely the price target, which is the monthly TD9 count breakout level. This did top with a monthly TD9 count pattern. So GT, hope that helped you out with both. Sorry about that. With both of those instruments, and thanks so much for your requests. Next request coming in from White Shark. IBRX is the ticker symbol. Let's get that up on our screen, see what we've got here. Sorry, it's taking so long. Not too much DV can do. I don't want to shut down the other system. So we got IBRX. So White Shark, you can see that this formed a Rhodes Momentum Indicator top. You see that big old bearish engulfing candle? I also have wave number 7, that's letter G out there. Price pulls back, as it's supposed to, tests and reject at this point in time its green oscillator change line. That says now that the signal's been neutralized. It's still out there. It's still got a top. But because key support is held, it's neutral. Now, price is trading above that green oscillator change line at 10:01. And as long as that condition remains, it's telling you that price might go target the top of the profile at 1178. The weekly time frame for IBRX has got no topping pattern whatsoever, so it says it wants to rally further. And the same is true for the monthly. So everything with regard to IBRX is being driven by the daily time frame, which has that Rhodes Momentum Indicator top but held support. Looks to me like this wants to head towards that 1178 area out there. If we do lose the oscillator change line for the daily time frame, that would then, Sharky, tell us that we're headed back towards the 788 level out there. So that's what we've got going on with IBRX. Danny would like to take a TGB, Seiko Mine. So let's get those charts up on our screen, see what they are communicating to you and I at 11:35 in the morning. And you got this trading out at, come on, give me a figure, give me something. TGSB, come on, there we go. So we're trading with inside the daily profile that has support at $7.16 and a sell zone, which is where it's trading into between 818 and 859. The weekly time frame chart has a wave number 7 signal. Price has pulled back, tested and rejected that green oscillator change line. We're trading above that. We're trading above profile resistance. The weekly chart is in full breakout mode, it does have a sell the D point top. So I'm going to cancel the full breakout mode and say partial breakout mode. And that says that once price and if price closes above the bear shooting star from back on January 16th, 925, then you'll be off to the races. And the monthly chart says you should be off to the races. Why is that? It negated its TD9 count top immediately. Tells you about a strong upward momentum move. Look, at some point in time, there's going to be a 2 to 3 to 4 month pullback out there. But we're just not seeing it. Not just yet. Now, the daily and weekly do have tops out there, but you've got to at least close below 716 for there to be any kind of downside traction out there. Now, that'd be $1 and change out there, and that'd be a nasty move, but that's what we're looking at, Danny, when we take a look at TGB. I hope that helped you out. And as always, thanks so much for your requests. NVIDIA. Everybody wants to know what's going on with NVIDIA, but Texas Tom wants to know, is the 172 area still a strong support level? So let's go find out and see what we can find out on the charts here for NVDA, which ought to populate here momentarily. There we go. Yes, at this stage of the game, I have to say that 172 area, which is the consolidation level, if we take a look at the daily time frame, and if we take a look at the weekly time frame. So I'm going to just simply scrunch this just a tad. There is your daily consolidation. If you take a look at the weekly chart, you can see that consolidation, Texas time, in between the weekly profile. And so you say 172, Stevie says 171.96. If we close below that, it starts increasing the odds. Now, I can actually move this consolidation pattern down just a tad further. So let me do that. Let's make this a tad more accurate. We're going to go with, right about there. There we go. So there's your consolidation, daily consolidation on NVIDIA. So the answer to your question, Tom, yeah, absolutely. And if you look at the monthly time frame chart as well, you'll see that the buy zone is between 161.51, and there's your 172 number, 171.64. So yeah, 172 is a strong support level for NVIDIA. Now we're going to say if you close below 171.96, 161.51 is in the cards out there. Sat P is interested in Mindy, MNDY out there, the sister of my first girlfriend. So we're going to take a look at, I screwed that up, MNDY, not NM, MNDY. And you know what that means? That means that we've got to wait for this break. So we're going to hear the music start in about a minute or two. We come back from this break for Sat P. We're going to take a look at MNDY. We're also going to look at Qualcomm. Looks like we've got some requests for EEM, BX, FCX. Would love to hear from you folks. Steve at TFNN.com. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the charts for MNDY up on our screen here for SAT-P. SAT. My suggestion is to wait on this. The first thing we need, and we need it this week, so we need it by Friday, is we need to see a tick below 68.68. If you get a tick below 68.68, the weekly chart will go ahead and complete a TD9 count bottom pattern. If we don't, you've got no bottom pattern on the weekly time frame chart. The monthly chart is in bar number 8, but that needs a tick below 68.68 as well to trigger a confirmed bar number 8 potential bottom out there. So I think on this, when I take a look at the daily time frame, there's nothing out here that stands out at me. So I'd say patience on this one. I think you're getting MNDY at lower price. In fact, the interesting thing here, this has got a monthly swing point that takes us back into November of 2022. That's what we're trading into. And that's got a volume of 15 million shares. And last month we pushed into that or below that with 83 million shares. Did we close below that? Let me see here. 73.58. Last month's close, 72. Wow. So that's a confirmed A to B equals CD pattern to the downside. Wow. That almost looks like it puts it out of business, which is not, A to B equals CD patterns don't really do that. But that's just what it looks like. We're going to go ahead and put this in here. I'm going to try to put it in here. I'm having problems with my cursor now. Good. There we go. Okay, so let's go ahead and try this one more time. So there's an A to B equals CD pattern to the downside on the monthly time frame. It does take you out of business, minus $33. So it's going to be the bottom pattern out here for MNDY SAT. More likely than not, will be a monthly TD9 count pattern, and that could be between. Well, it's not now. It's got to still tick below that level, and then I would say it's between now and the next 2 months out there. So it could actually be May before that bottom. So that's what we see there. Let's go take a look at Qualcomm. Maybe Qualcomm's chart are a little bit easier for us to interpret. So let's put those up on our screen. Take just a moment here for this to populate. We've got Rahul says 73 to cover for light sweet crude. We're going to take a look. That's actually the next request out here. Take a light sweet crude. First, wait for the Qualcomm charts here to populate. So Qualcomm forms a nice TD9 count bottom pattern back on February the 5th out there. Price today is pulled back. It's testing. We're trading inside that swing point. So that swing point on Qualcomm, just waiting for everything here to populate so I can grab this. The volume on that swing, again, February 5th, is 30 million shares. And the high of that pattern is 139.33. If it can close above that with less than 30 million shares, today so far we're at 2.4 million shares, so that would be a less than 30 million share day. And yesterday was 8 million share. So you're looking for here on Qualcomm sat is a test rejection of that TD9 count swing point. If you do, you're likely to get a counter trend move up towards the 147.62, 149.75 level. The weekly time frame chart shows that price is testing the bottom of its profile. And as long as price remains above that being 137.90, okay, support will have held. Finally, to the monthly time frame, Qualcomm is testing profile support. That profile support level is 138.29. If we were to close below that, you also have TD9 count breakout support at 128.03. So the monthly's back to a support area. Whether it's going to hold the weekly profile or the monthly profile or not, I don't know. The weekly does not have any kind of bottom pattern. You're actually looking for a push lower to get to a TD9 count, but that's not likely to happen. So you're trading with inside the profile. And the daily's giving us a signal if it can reject that swing point that you get a counter trend move, at least a counter trend move out there. So I hope that helped you out, Sat. Now let's go take a look at Lightspeed Crude for GTE. We are in the April contract. Let's pull that up on our screen, see what we've got going here and where this is headed to, or really where the next resistance level is at. We know we've got a rally that's going on. Is there any clear defined resistance? Maybe a weekly TD9 count breakdown level? Let's go find out. But on a daily time frame, we've got an A to B equals CD pattern to the upside. We do have, I'm not going to go there just yet. That requires a bearish reversal candle to confirm a top. We are in bar number 9. There it is. So we are in bar number 9 on the weekly time frame for Lightspeed Crude. Again, this is the April contract that we're looking at. That topping signal, though, I may not go ahead. Well, I know one thing. It will not complete until next week. So how do you put this together? On a monthly basis, we are trading above a TD9 count top. In order to negate that signal, and this would also generate an A to B equals CD pattern on the upside, we need to see a monthly close above 74.33. We're at 75.13. Just to draw in that A to B equals CD pattern on the upside, just so you get a feel for a price projection level. Let's draw this in. So there's our A to B point. We're going to copy it. We're going to paste it. And then we're going to move it. And we're going to move it to the lowest low that takes place. It looks like it's right there. And so you have your 1-to-1 A to B equals CD pattern on the monthly time frame for Lightspeed Crude. Says, this is going to be a bummer, says that we get up towards the $90 area, 87.80 out there. What could stop it? Well, the monthly TD9 count top over on the very left-hand side out there, the one that formed out here in July of 2022, that still could hold. And why could that hold? Well, we're the early part of the month, and you've got a TD9 count that's going to confirm this week on the weekly, complete next week. If we were to get a daily bearish reversal candle, that would be the indication of a start of a move lower out there. Now, that move lower just may be a couple counter trend move, 2-day type move. Could be longer than that. But you do have a reason to be cautious now on Lightspeed Crude from the weekly standpoint. Steve Rhodes with TFNN. No, we're not at break. I just thought we were at break. Let's go take a look at the emerging markets out here. EEM. So these should be getting crushed with the U.S. dollar index. It's up 1 full point today and was up yesterday as well. But let's go find out what EEM is doing. I could be completely wrong on this, but it should be moving. It's very sensitive to the U.S. dollar index. So let's go see, in fact, what it is doing out here. Yeah, ESEEM, most certainly. So it's got a Rhodes momentum indicator top that formed on Friday of last week. Now price is below the bottom of its daily profile. That's at 59.70. Why has price stopped where it is? The answer to that question is blowing in the wind. And that wind has got 57.66 all written all over it because that happens to be the bottom of the weekly profile. So the next key level for EEM GTE is 57.66. If you close below that, we're headed lower. The lower price target on the daily time frame is 53.89. The lower target on the weekly time frame is 52.58. The weekly time frame, if it does generate a bearish reversal candle, will go ahead and confirm a sell the D point top. In its instance, it would try to pull back and find support around 54.75. So right now, at this stage here, the key number for you to be watching and observing is going to be 57.66, and that will not change. That's going to be in place all week long. If we close below that, EEM is headed lower out there. Another request to take a look at BX out here. Let's go see what this is doing. Backstreet Boys, Blackstone, I think, BX out here. Let's go see what this is doing. BX is trading out as we speak right now. Oh, come on, populate. I'll take a swig of water. 109.50. If you were to get a bullish hammer candle today, that's what we've got right now at 11.50, you'd have a Rhodes momentum indicator bottom pattern. Actually, yesterday you got a Rhodes momentum indicator bottom pattern anyways because they had a nice bullish piercing candle. But still, price got to close below yesterday's low. That's at 115.33. The weekly chart has a confirmed A to B equals CD pattern to the downside. It needs a bullish reversal candle to confirm its bottom. And the monthly is trading below profile support. So right now, the daily is just suggesting a counter trend rally. The weekly and monthly still want lower price. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. Next question up is from Rahul inside the Tiger's Den. He's intraday trading NVIDIA, and his question is, do I see 185, 186 this week? Let me tell you what I see at the moment from an intraday standpoint. First, you had a buy the dip, I don't know what signal you were using, but I can share with you that the 15-minute time frame chart completed a TD9 count bottom pattern at 11 a.m. And we've been rallying ever since. We have not closed below the prior candle's low out there. This suggests to me that NVIDIA wants to rally further. The rally further price target on the 15-minute time frame is going to be 181.93. What other resistance levels do I see? The 30-minute 181.21, 182.44. 182.59 on the 65-minute chart, 183.08 on the 130-minute time frame chart. But it does look like to me that NVIDIA wants to rally further. I'd say watch, again, that 181.93, 182.63, 182.91 level. As far as getting back to the 185, 186, well, we're on our way right now. And the 195-minute chart says no problem in doing that. It found support at this breakout level, 174.60. So it looks to me like NVIDIA wants to rally a bit more. Let's go back and so the charts again. That I believe the charts of the day. I'll leave you with the charts of the day. It is coming from here. It's really coming from the Spot VIX Index. Spot VIX Index right now traded at 2407. We are traded above all forward future contracts. That puts us in a contango. That tells us that the market is interpreting this as a short-term event. And those short-term events, what do they usually do? They usually turn into pretty significant bottoms out here. But we've got to get that spot. For me, it's not just about those forward future contracts. It's also about the 3-month, 6-month, and 1-year counterpart out there. So this is more of a end-of-day reading instrument than it is at 11:56 in the morning, but still the most important charts for us to be watching. Folks, stay tuned for all the great programming. I'll be back with you tomorrow on Wonderful Wednesday, and then I won't be able to host shows on Thursday and Friday because I'll be spending time with the newest member of the Rhodes family. Folks, stay tuned and take care, and I'll see you tomorrow.